Welcome to the February 4th, 2019 Advance Report for McGowanGroup clients and NetWorthRadio.com listeners. I'm Spencer McGowan, your financial weatherman and President McGowanGroup. This is a fast-paced tour of the global financial markets delivered each and every week right here on YouTube. And for the long play program, tune in to NetWorthRadio.com. We are looking at 1 month and curious strength in January after a little rocky start here. What did we have? We had gaps up here at the end of the month. The exact opposite of last year. Money flows this year likely rebalancing. Pension plans who had stocks go down last year to get back to their mix, say 50% stocks, 50% bonds. Well, they would be adding to their equity portfolios to reestablish that balance. And it looks like with that month-end deadline, they did it by buying a few more stocks. That's what the money flow looked like this year. Let's look at last year. This is a 6-week period, which takes us from the end of January. We just looked at it for this year. Notice this gap down that started on about the 28th of January. The rebalancing correction went from a winter storm, we called it, 26.5 down to near 23,000 on the Dow. The overnight lows at the apex of that correction were close to 23,000 on the futures. But this appears to be institutional rebalancing. January is a big deadline for that, for the pension plans. Before, in 2018, they had big gains in 17, likely selling stocks and buying bonds. They did it all at once. Once Katie barred the door, the correction started. That's a big difference. Earnings reports this year, we're going to dive into that at the NetWorthRadio.com with more specificity. Apple actually had a 4.5% revenue decrease. That happened to be a little better than what was expected with iPhone sales going down 15%. But there were bright spots in those reports. Let's take a longer-term view of interest rates real quick. This is the 30-year U.S. Treasury interest rate finishing the week at about 3%. This is the 10-year Treasury, which is the benchmark for mortgages. Last year, we saw mortgage rates climb to near 3.25% at the benchmark. That meant about a 4% if you were refinancing. But look at what's happened to interest rates. The Fed says all clear. No more rate increases for the foreseeable future, and we're down about 2/3% on the benchmark for mortgages. That's actually good news if you're refinancing or you're about to buy a house. Harley Davidson, well, we're going to call this the South Park effect. Notice the downtrend here. This is a 3-year chart. Harley Davidson, very cyclical because it's an optional purchase typically made by a middle-aged husband against what his wife wants to do. And so here we call this the South Park effect. They said they're having trouble reaching the younger generation, and you could see the correction that ensued on this chart. That's a generational impact. The millennials, after seeing that episode of South Park, likely not excited about buying a Harley. All right, oil versus pipelines. Notice this pipeline index following oil down. Here's the $27 low in oil. Here's an apex. The master limited partnerships represent the pipelines or energy infrastructure. What we saw this week in the earnings reports were some very impressive and amazing gains in both revenue and net income. But notice they've lagged oil by 81% since this apex right here. It looks like because of the turn in earnings and profits, energy infrastructure could end up having an extraordinarily good year and maybe a good 5 years, not without price risk. And there is a correlation to oil, but sometimes it lags. The pipelines could be as much as 81% behind. Thank you for tuning in for this week's Advance Report. I'm Spencer McGowan. If you'll subscribe, you'll get fast-breaking videos when the markets are in turbulence with guidance. Join us at NetWorthRadio.com. My firm, McGowanGroup Asset Management, sponsors NetWorthRadio.com and, of course, our YouTube channel under McGowan Group. Some educational
disclosures and discussions that I wanted to add to the broadcast. The first is, I'm very proud of our team, including Stephen Norris, who will be added as soon as we redo the picture. He's our newest team member. Come down, meet the team that cares, get a written plan, because the securities we discuss, the financial news we discuss, that's not a recommendation until you actually come down and get a customized plan at the Crescent. You'll get a tour, and we look forward to seeing you. We're going to cover value at risk of loss in portfolios, and you can see it right here. Learn about our performance, what happened in 2008, how long did it take to recover. All of those items are posted right here at NetWorthRadio.com or the McGowanGroup.com. The other part of the program, when we look at price fluctuations in bear markets and risk control, that's a huge part of NetWorthRadio.com. We look forward to helping you advance your plan and your cash flow. Come down and meet the team that cares.